The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Tuesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading, and you have a PPI number. It comes out a little bit soft, only 0.2%. That number rising, the market looking for about 0.4%. Not as high inflation numbers as you may have expected. We get CPI, consumer prices, tomorrow. Now remember, CPI, the Fed's preferred inflation gauge, is the CPE, okay? Consumer price expenditure, not the CPI. PCE, excuse me, that's what it is. Fed's preferred inflation gauge, PCE. What we get tomorrow is CPI. CPI, a huge component of that is shelter, not as big on the PCE, which the Fed prefers. Nonetheless, you got a soft number. You got markets liking it. You got the S&P, quite a resurgence yesterday. You're talking about 110 points from the lows of early yesterday. We were down almost at that price level in terms of 58.13 early yesterday, and just like that, we were trading with a 5,900 handle at 6:30 last night, early this morning, and we're flirting with that level. You see the reaction at 8:30 on that PPI number, up to almost 59.20, and we've given up some of the action to the upside. NASDAQ 100 yesterday pushing 20,700. As I was on the air about 24 hours ago, and boom, just like that, we're at 21,046. You see the reaction as well. We test the highs of the pre-market action at about 21,140. And just like that, we've given up almost 100 points of the acceleration. Dow with a strong day yesterday, up 127 points, or 0.3%. And how about the Russell? Up 0.8%, or 18 points at 22.25. Bitcoin up $2,700 at $96,910. Crude, quite the acceleration recently from $72 a week ago to $79.27 yesterday. We're trading at $78 right now in crude. Gold off $5 at $26.73. And we jump to the all-important notes and bonds. And we're sitting right now at about 4.78, I think. Where are we exactly? No, we're back to 4.79. Okay, 4.79. is where we are back to on the 10-year. And you jump over to the dollar index. Now, we got a couple stories out there. We have potentially a rollout of tariffs, but man, you don't know what's going to happen until it happens, right? And it is interesting that 6 days from right now, Monday the 20th, the market is closed. That's also Inauguration Day. And we're going to find out what some of those executive orders, especially with tariffs that are probably happening day one, getting done. Is it going to be a gradual rollout? Well, we'll find out. But what is interesting is you come into Friday action. I'm trying to find that article in particular that talks about the rollout, because you got a couple things hitting the dollar today, and yields. And there it is right there. Now, I'm sure you're going to see a rebuttal, but the amazing thing is 6 days from right now, we're going to find out where reality meets rhetoric. Trump team studies gradual tariff hikes under emergency powers. The plan would boost import duties 2 to 5% a month on trade partners. The idea is you ratchet up the pressure for negotiations, and that would be slowly ramping up the tariffs month by month, gradual approach, boosting negotiation leverage while helping avoid a spike in inflation. They'd ratchet up 2 to 5% and would rely on executive authorities under the International Emergency Economic Powers Act. He's talking about an economic emergency. The proposal, President has a lot of latitude. This is how it works, if that's how they go down the path. And it is interesting that you have Kevin Hassett, right? He's got to get confirmed. He's going to get confirmed, all right? You have Hegseth going in front of Congress, I think, today. That's going to get some headlines. Doesn't really have to do with the market, but you're talking about the defense secretary. So you're going to get those referrals. Hassett's in there as well, of course. That would be a risk-on environment when you compare it to what was thrown out there on campaign rhetoric of 10 to 20% on all imported goods, 60% on China, across the board, everybody pays on every good. Doesn't seem like that's going to be the case, but guess what? We find out in 6 days, and when we reach the close of action on Friday, we come back and executive orders are in place when the market opens on Tuesday, the 21st, I assume, right? But we will find out, and it's only 6 days away, but yet a little bit of a recoil in the dollar, back to 109.40, a slight recoil on yields. But you see the resurgence on that 830 number, and nonetheless, we're pushing 4.8%. Everybody's talking about 5% yields out there, and you got the dollar just pushing. The 110 price point. You take a look at this thing on a weekly, okay? Let's put it on a daily first. Yeah. There's your daily. Higher highs, higher lows across the board since September. And then you take a look at this thing on a weekly, and we got one red bar since September, folks. We're approaching February. Do you hear that? The dollar index has one red bar since September, and we're approaching February, okay? Now, we're right where we were to open this bar. In terms of we opened the session technically at 109.64. We're at 109.67. That bar only positive by 3/100ths of a point. But only November 25th, ripping back to 106 before you accelerated higher. And let's see where we are on a percentage basis. Yeah. If you do a 1-to-1, that's bringing you up to almost 113 and change. And that's not far off. Look at that, right? Lining up the lines, maybe that's where we're heading. As there's no backing down yet, but nonetheless, let's get into the PPI numbers that we get this morning. PPI for final demand rose 0.2% from a month earlier. Median forecast was 0.4%. Compared with a year earlier, overall PPI climbed 3.3%, and core advanced 3.5%. You know what stuck out? I was reading this morning. If you're worried about inflation, folks, go eat some vegetables. Vegetables, come on, where are you? They were down like 15% or something like that. All right, I'll find it. Was it in this one? No, it wasn't. It was going to be in this article somewhere. All right, shame on me. I will find it. There it is. PPI report showed a 0.1% decline in food prices, including nearly a 15% slide in the cost of vegetables. Energy prices, of course, trading higher. But yeah, so if you're dealing with somebody that's under the stress of food prices with inflation, let them know that vegetables just came down 15% on a month-over-month basis. Go eat your veggies. Nonetheless, 0.2% on the PPI. Tomorrow we get CPI at 8:30. We get bank earnings kicking things off tomorrow morning as well with JP Morgan. And it was interesting. The headline comes across as I was beginning the show, and I thought it said Diamond, but no, it did not say Diamond. JP Morgan exec longtime number 2 is going to step down. Well, maybe he's worried that he's not the number 2 that's going to get the role. Nonetheless, you got JP Morgan slightly in the red this morning to 242. Stay tuned, folks. We'll come right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and technique to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger Zen. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger Zen, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We have the markets in positive territory, digesting that PPI number and taking a look. I love this chart, this comparison when you're talking about, is this where it is? Did I pull it over? There it is. So the numbers we're getting this week are the PPI we get this morning. We get CPI tomorrow. The Fed prefers the PCE, okay? PCE on the right here. Let me blow it up a little bit. The CPI number we're getting tomorrow morning is on the left. Keeping in mind, Fed prefers the one on the right, the PCE. Notice the two huge differences, the yellow and the red here, which are housing and healthcare. Best way to think about it, okay, is that the personal consumption expenditure is what you're actually consuming, even if you're not the one paying for it as the consumer buying it. And I know I'm getting into some semantics, but the best example is healthcare, where you're consuming it as an employee of a corporation that's providing you healthcare, but you're not necessarily paying for that healthcare. But guess what? The cost of that healthcare does translate to your pay, to overall inflation, to what you're being paid, the value you're being paid. That's what the Fed likes to take a look at and try and control. And the other number is that housing is not as big of a component, because when you take out all the costs of healthcare, housing on the CPI basis represents almost 1 out of 3 in terms of a 32% weighting in the CPI. It's only 15% in PCE. Healthcare on the reverse, 21% of PCE. When you're looking at CPI, you're only at 9%, and then you go down the line. Financial, a much bigger component of PCE, going to be the same difference, right? You're not exactly being the consumer that might be paying for some of the financial products that you use. Nonetheless, you're consuming them, and the cost of them does translate to the economy, et cetera. Nonetheless, so that's the numbers we're dealing with. We get PPI this morning, CPI out tomorrow. Banks kick things off as well. JP Morgan, the biggest one out there, they report tomorrow morning, 8:30 a.m. Eastern time. And yeah, long-time number 2. He was the COO of JP Morgan. He's going to step down in that role in the coming months, and it looks like he's been there for 4 decades. Pretty remarkable. Yeah. Worked at JP Morgan and a predecessor firm for more than 4 decades. He's going to cease being COO and president in June and retire at the end of 2026. Talk about a jockeying for position. Maybe he didn't think he had the ability to secure that position. Maybe he just wanted out after 40 years. You know, there's something to be said in terms of maybe just not wanting that role, even with the power that it comes with, which is pretty remarkable. But you jump over to JP Morgan, and yeah, looks like maybe you get a little bit of a slide on that news as the jockeying continues. Who's going to take the number 2 role? Maybe that was somebody seen as a potential successor. It definitely was somebody seen as a potential successor, but the position opens up, and nonetheless, when will Jamie Dimon be there until? We will find out. But news hitting JP Morgan. Interesting that you have that hitting, right, 24 hours ahead of when they come out with their numbers tomorrow morning. Nonetheless, we keep our eye on yields, sitting at about 4.79% right now. We jump over that dollar with the dollar pushing 109.60. All right, what else we got going on in this market? Let's take a look at where the market's pricing our cuts right now. We got a meeting coming up at the end of this month. Not sure who is looking for cuts in this market, but nonetheless, there's a 2.7% chance per swaps for the CME FedWatch tool that they're looking for potentially a cut. But nonetheless, the market pretty sure that the Fed is not going to start cutting anytime soon, to the point where you have to go all the way out until July 30th. And that's the only point you actually start to see the odds tip that maybe we could have a cut to bring the Fed to 4 to 4.25%. Right now, we're at 4.25 to 4.5%. You go out to December, it's not that much different, okay? Yeah, basically, where the market's pricing things right now, okay, and don't get caught up on the natural semantics of 40% to 42%. The market's pricing in one cut probably at the very end of the year. And you have to figure out whether you think we're going to get more cuts than that or less cuts than that. It seems like a pretty adequate pricing right now, where we are. All right, what else we got going on in this market? Yeah, the fires in L.A., pretty remarkable, and it's just not stopping anytime soon. And, you know, a bunch of disinformation, of course, out there, and especially when you happen in a well-to-do area, to put it lightly, like Pacific Palisades. But it is interesting when you look at the insurance market and how, you know, the stories out there are private firefighters, but it's the insurance market. And this is what is happening in an environment where you have constant battles with Mother Nature. And when you're dealing with, you know, I saw the report yesterday that Tom Hanks' house was okay. I think $26 million. The house right next to him burned to the ground, about $130 million estate that had been used in succession. You got to believe that insurance companies are going to be paying attention if they could potentially save $130 million payout. And what this journal article talks about is Michael Johnson. You remember him? Man, when was he? When did he win his gold? A long time ago, I feel like. 2004? Atlanta, 2008, something like that. Olympic medalist. And, you know, he talks about you're paying private services to set up people who come out and, you know, for the right fee, insurance companies, and this is probably where you go out. We have an insurance problem. We're dealing with it in Florida, and if there was anything the insurance companies could do in Florida, but guess what? When the floods come in, very difficult, as opposed to fire, where they talk about that, you know, for $5,000, which is a paltry amount when you're talking about the sums that they're dealing with there. Johnson pays about $5,000 a year, leases a system with hoses, and then on top of that, you have people that come out, prepare the home, whether you're spraying it with retardant, whatever you're doing, right? Clear and brush, digging ditches, I'm sure, to that degree, but pretty remarkable. This is where insurance is going on the fire spectrum, but not surprising. Oh, boy. Before I thought I knew it. I said 2004 to 2008. How about 98? Was it 98? 1992 to 2000, man. Is that when those games were? I remember him. That upright running, the 400 meter. Yeah. Boy, you just keep those people in your thoughts and your prayers, man, because it is a tough one when you're dealing with disasters like that. And the rebuild is going to take a while, man. Regardless of money, there's a lot of people out there with homes where all the equity is in their home. They're dealing with inflation, insurance, not inflation, right? And that's going to be a battle. And what you deal with on something like that, because we're seeing it in St. Pete, dealing with the building that my dad has going on in St. Petersburg. We were down the city a week or two ago talking about permits for one potential project. I mean, the place is swamped, folks, justifiably, right? People in there trying to get what they need just to be able to rebuild. And it's a constant battle. And you're facing it, and LA is going to be facing it for some time. All right, we come into the opening bell. S&P's above 5,900, up 28 points. NASDAQ 100, up 131. Markets projecting lower price yesterday. And how about this NASDAQ? Look where we are in these charts, man. NASDAQ, we're back to July of 2024 prices right now. 21,075 coming back for the opening bell. Don't go away, folks.
This market has turned red, Tigers, and the question we should be asking ourselves is how to position for a potential bear market. Plenty of gains can be made in bull markets, but if we've entered bearish territory, that strategy needs to change. So, how do we pivot so we can see green in the red? Join Larry this month, January 10th and 24th for live trading action. You'll sit next to Larry as he places live trades, explains his methodology, and answers questions live. Larry brings his decades of trading knowledge directly to you, teaching you how to navigate this shifting market. Go to the front page of TFNN.com today and secure your spot fast for live trading Fridays with Larry Pesavento. Happy New Year, Tigers. We'll see you January 10th and 24th. TFNN. Educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open. S&P's just above 5,900. We're up by about 0.5% in the S&P, up by 27 points. And yeah, quite a far cry from yesterday's lows on a couple occasions, flirting with 58.20. We're trading right now up almost 2% from there at 5,900 on the dot. NASDAQ 100, you're up by about 0.5% as well, 111 points in the green. Dow up 0.4%, the Russell up almost 0.9% at 2225. We jump around to some of the Magnificent Seven. Apple up by 0.1% right now. You jump over to Amazon shares. Look at Amazon, man. Relentlessly strong, up by 1.2% right now. You check out this thing. Right near those all-time highs at 233. We're trading right now at 221, up by 1.1% for Amazon. You jump over to Meta, down by 0.7% from Meta. Google shares this morning up by 0.2%. We jump over to Tesla. Catches a bit, up by 2.8% right now. Does Tesla like the fact that Elon might control not only X.com or X, formerly Twitter, but also TikTok? You know, I was thinking, you can't help but look at that amount of wealth. What is Elon pushing right now? 450 billion. What's he at? Let's see. 416 is what I get just by Googling Elon wealth. 426 is a number that you get maybe in Wikipedia. The absolutely remarkable thing, right, is that his wealth is growing. He's not dealing in risk-free income, okay? But when you look at that wealth in terms of what we are paying, taxpayers, you just hold treasuries, man. You're talking about making, what, 150, 200 billion dollars? 15 to 20 billion dollars risk-free on an annual basis, 15 to 20 billion. Now, that's not the game that it's playing, but it is remarkable you talk about that much. The point being, okay, not a lot of money to control the public discourse of X and now Twitter. TikTok. I think that's going to be an attractive play for him, and they're going to get pushed out of the market anyway, so he's probably looking for a deal, and it's going to be an interesting, it can't get more interesting, right? The TikTok saga just continues to get more interesting, nonetheless. You jump over to NVIDIA. So, NVIDIA shares, quite the slide from 153 to 130 yesterday. You're up today, up 1.5% right now, or $2 in the positive at 135. And we jump around to some of those bank stocks before they kick it off tomorrow. JP Morgan, they claw back the losses we had pre-market. Looks like the market's not too worried about that number 2 stepping down. A little bit of a reaction, and boom, just like that, we're positive with the market. Bank of America up by almost 1% right now. Wells Fargo up by 1%. Citi up by 1% as well. You jump over to the airlines. Delta up by 1.2%. Southwest, news out there this morning. They're not hiring right now. Not happening. Yeah, there's that headline. They're going to pause corporate hiring, most summer internships to cut costs, and they're on a cost-cutting mission. And yeah, we'll continue to evaluate hiring needs on an ongoing basis, but it's not happening right now, man. They're going to pause its employee rallies, a company team-building tradition. No rallies. They've been having rallies since 1985. Well, guess what? Times are lean, and they got to cut. They report their numbers January 30th. Yeah, look at that. So Southwest only up 14% over the past 12 months. Uniteds are up 160%. Delta and American up 70 and 33. We've been talking about some of the run these things have had. Okay? And it is remarkable from the lows in August. You're up, what, 40, 45%? But they've had quite a tough year. You compare that to something like Delta, right? From where you were at the beginning of the year, where you were in August at that same low, quite the accelerations. United, even more pronounced, from 37 to 106 recently for United. Yeah, a lot of expectations in that airline industry at those types of valuations, though. You talk about the geopolitical landscape. Trump taking office in 6 days. There is a lot going on, man. He is dealing with a crisis out in L.A. that he's going to have to deal with in California. I shouldn't just say L.A. When you talk about the Middle East, some potential good news out there. Israel, Hamas are finalizing a Gaza ceasefire agreement. Be nice to see some of the tensions over there pause, and they're finalizing the terms of a ceasefire deal that could be announced as early as today. raising hopes of an agreement that would at least pause the fighting in the Gaza Strip and free some of the hostages. Man, what are we going on? A year and a quarter? Pushing a year and a half? Nonetheless, that news out today. You jump back to that JP Morgan news, jumping around to the Bloomberg term of it, and the new COO that's stepping in for the gentleman that had stepped down does not want to be considered for the CEO position at this time. Her clear preference is for a senior operating role, working closely with Jamie and support of top leadership. Now, do you say that if you want the role no matter what, right? So Pinto is 62. He's stepping down. He's young enough that he could have been CEO, man. Maybe he just didn't want it. Maybe she doesn't want it, right? You're going to become an international, well-known person. A lot of people want that, but a lot of people don't if you think hard about it, which isn't interesting. All right, not saying that's the case. A lot of people want power, especially if you reach the role of a C-suite executive at JP Morgan. But nonetheless, the new COO, I think that's what you'd have to say, though, right? You walk through, game out the situation, right? You can't be made COO and say, man, I'd really love to be CEO, too, on day one of being COO, right? So there's kind of that metagame that plays through there. But they got a shake-up going on at JP Morgan. Market doesn't mind it as you're trading higher with equities across the board right now. JP Morgan up by 0.2%. And we get the S&Ps above 5,900. Now, as I was talking about in the NASDAQ, critical area on the NASDAQ here, just like that. You're back to where we were in July of 2024. You take a look at the election. Okay, there's your election the day after. All we are is basically one day after the election. And we are now almost 1,500 points, 1,300 from where we were on the highs on December 16th in the NASDAQ 100. We jump over the VIX. Taking a look, just going 20 days back, you can see the elevated volume. Get that off. That's a little old. 1851, down from about 22 in the pre-market early yesterday morning. As the market accelerated higher yesterday, the VIX trades from 21 down to about 19. And as we proceed higher yet again, as this market rewards dip buyers yet again. But keep your eye on that chart. Keep your eye on that level. It's a nice round number, 21,000. That's the move we made in July, I think. Let me see. Yeah, and what's so remarkable is, right, you're talking about 21,000. Keep in mind these A to B CDs, folks, on a longer-term basis, okay? 20,623 was your full A to B CDD projection in the NASDAQ 100. That's an A to B leg of 10,139 points. You did it twice since the COVID lows, and we're still 500 points above that price point in the NASDAQ 100. Just to put in context how high this index has risen, how quickly across the board. If you take a look at the S&Ps, that price level, 61.36. We hit 61.63. Okay, so we were at some pretty lofty levels across the board. NASDAQ 100 sitting right where we were in July. And we got markets, though, digesting a soft PPI number, positive prices. We'll take a look at some other equities that are moving this morning. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading not long-term investing. Whether you're a bull or a bear, you choose the direction. For up-to-date pricing and performance, go to direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got markets pushing session highs right now. NASDAQ 100 up 0.9%, up 178 points, 21,120. Dow up 0.4% right now, 42,711. You get the S&P's up 0.6%. The Russell leading the way up 1.25% right now. We keep our eye on the all-important yields. And the dollar, not a huge reaction. You're seeing a reaction in equities. But check out the 10-year. Just chopping around. There's your 8:30 reaction. We recoiled, and we're sitting right where we were coming into that PPI number. You jump over to the dollar index, DXY. Actually backing off. Now, that could be some tariff news. Okay, because there's a risk, man. There is a real risk to short-term markets if you got an executive order that matched campaign rhetoric. And, get the politics and the divisiveness out of it, even if you believe in them longer term, which is a valid argument if you want to make it. I think it'd be tough to deny the short-term implications of across-the-board tariffs on Canada, Mexico, and China at 60%, right? So if you take that possibility out of the equation, okay, then what's going to happen? Well, you're going to see markets pare back a bit, right? You're seeing other currencies strengthen a bit if they're not going to be hurt by the tariffs as bad, whether you're talking about Canadian dollar. Let's jump around. There's a little bit of volatility on the Canadian dollar. Okay, you see the morning. But we're going to find out in 6 days. And you look at a little bit of dollar pullback. We're back to the lows of yesterday afternoon, and as opposed to a gradual rollout. But if you think about the power of negotiation, is the strength that comes behind it, right? Your position to what? Walk away. If you need a deal right now, and the other side knows that, it's very difficult, okay, to be in that position. Well, what if you're in that position and, tariffs are ratcheting up every month? They're going up 2 to 5% until they reach this level. You want to get a deal right now? It seems like a valid proposal, and the market likes that, is the point. We're back to 109.50. But with that said, here's what you want to consider, okay? We're back to 109.50, and I'm talking about right now that the market has a little bit of a pullback in the dollar index, which was just at 100 in September. Okay, we have extreme dollar strength, and there is no real pullback yet. And I just showed you that on an A to B, C to D basis, the move that we made, you get a slight pullback. And that pullback that we did in the dollar when you traded you're talking about not even a 382 really. That pullback from where we were at about the 108 price level, you pull back to 105.50, about almost a 382, and then you take off again in the dollar. Keeping our eye on the all-important equities. Look at Tesla, man, up by 4%. Trading at what? 419, almost 420 for our man Elon. You know, what's interesting is you look at these volume numbers, right? You just take a look at futures. I was looking at these this morning. A day like yesterday, right? Big day in the market, huge turnaround, down again. The volume wasn't too huge. Okay, you could have had a bigger rejection on the NASDAQ 100. You're talking about 607,000 contracts versus 691 the prior day when you traded down to these levels. Okay. Take a look at the S&P, same thing. You reject that price, okay, and that is a rejection. But it's remarkable that even at those lows, you couldn't get volume as that market powered higher. You actually did less volume than the prior day. In the S&Ps, you did over 2 million contracts. You did 1.7 yesterday. So we couldn't bust it on volume, man. Volume comes in light with a little bit of rejection, just selling, just not there at those levels right now. And then we get PPI, CPI. Now you come into a Fed. 2 weeks is what we get. So we come back next week, right? Pretty remarkable how this all comes down. It's coming at you, folks. Earnings kicking off right now. We are closed from Monday. Market's going to be closed. It's going to be inauguration day. TFNN, we won't have live programming. We're always in the Tiger's Den, folks. Head on over to the front page of TFNN. Check out that Tiger's Den. Always nice on days when the market is closed and you're in there taking a look at the market potentially anyway. But yes, so we have 4 trading days after that, and then you come back and you're dealing with the Fed. Sorry for the pauses as I get everything together. But January 14th right now, the next Fed meeting, January 29th. It's, there's not going to be a lot to say in my opinion. Unless, okay, they try and actually talk about some of the potential policies and tariffs that are in place. Because Chairman Powell, rightfully so, has refused to speculate on what future policies they'll have to deal with. They deal with the current environment. They model them. He literally said, he said, we're modeling for potentials, but we're not planning for them because they're not here, right? And that's not going to be the case on that meeting, though. Okay, so they would be right to pause. The market thinks they're going to pause. I don't see why they wouldn't pause with the data that we've gotten from a hot jobs number to an inflation number that's not as hot as you may think. Okay, they can give things time to play out right now with jobs robust, unemployment at 4.1%, and the PPI only rising at 0.2%. That's what you want to see, right? A hot economy and prices not going up. It's the Goldilocks scenario of full employment and price stability. So why would they not pause if that's the numbers they're getting? But are they going to be talking about if we get across the board tariffs, if we get a gradual rollout? I'm sure they're going to be dealing with some questions. So we come back after Martin Luther King Day on the 20th. New president in tow. And yeah, that's what we're talking about. We're going to get 100 executive orders. Well, I bet we're going to get a lot. But there's going to be a few that especially are important to the market when you talk about tariffs with some of our biggest partners, China, Mexico, Canada, how they'll be applied, how we'll go forward. And you're probably going to get them on day one or right there by the time we're open 1 week from today in the market. And you got markets pairing some of the gains right now. Keep your eye, as I said, on that NASDAQ 100. We're right at a critical level, which is where we were in July. S&P's sitting at the important 5,900 level. That's where we were at the highs back in October. Okay, you come in at 59.27 in October. The Dow, strong day yesterday from the Dow, trading up about 1/3%, and the Russell up by 21 points right now, 22.28. We take a look at crude. Yeah, you break above this 77.50 area. The highs back in October, 78.46. Just above where we are right now. You get a little bit of a turn. It's been quite an acceleration. Crude up by $11 just since where we were. Yeah. All right, folks. S&P's up by 20. We got one more segment. Stay tuned. Coming right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got market volatility in spades, as my dad would say. Look at, we get back that entire move we had in the PPI. There's your 830 number. We trade from 58.80 up 35 points in the S&Ps, and watch out below right now with the S&Ps. We just gave back 25 points in the last 9 minutes. And we're trading right now, pushing almost the lows at 830 at 58.86. NASDAQ 100, similar action. You trade down 100-plus points from where we were, about 940 this morning. And we came into that number at 20,960. We're trading right now at 21,000. Dow up by 0.2%. Russell, a little bit of a give back, but still up by 0.8% right now in the Russell. Gold, 26.78. We had a pullback early yesterday. It was interesting on gold, right? Because gold, you had a little bit of an uncoupling from the tandem nature that they had been trading in terms of the dollar had been trading higher, gold had been trading higher. You had a pullback in gold yesterday on dollar strength. And it's going to be interesting to see if we do get any pullback in the dollar index, if gold would get a little bit of a reprieve. But not today, as you have gold right now flat on the session at 26.78. We keep our eye on crude, 78.12 right now. Take a look at yields. Yeah, 4.79%. So as I mentioned, tomorrow, CPI numbers tomorrow. We got JP Morgan kicking things off. They're up by 0.5% right now. The banks trading higher. Bank of America up by 0.6%. Citi up by 0.7%. I believe we get Delta up by 1.8% on Friday as we kick it off. Close from Monday, Inauguration Day, executive orders to come, and then we get a Fed 2 weeks from tomorrow. All right, folks, thanks so much for kicking your trading day off right here at TFNN. Stay tuned. We got Basil coming up next. We got Steve Rhodes. We got Fast Market, Larry Pesavento, Jacob Shoup this afternoon. Have a great Tuesday, everybody. I'll see you tomorrow. Have a great one, folks.